All right, folks, here's a challenge for you. Hit that pause button, take a crack at this question, give it your best shot. Once you have had your go, hit play, and I will walk you through how I would attempt this particular problem. Ready? So let's dive in. Welcome back. But before we attempt the question, let's talk a little bit about accrual accounting. Accrual accounting, for the purpose of statement of profit and loss, doesn't really care if you pay monthly, quarterly, or half-yearly. It only cares about the full amount of the expense being incurred, whether the expense is paid in full or not paid at all. Therefore, in the exam, please keep an eye on the full expense figure by considering the outstanding loan liability and working out the interest expense. When it comes to presenting finance cost on the profit and loss statement, the accountant will debit the finance cost and initially credit the interest payable. And when the cash payment is finally made, you should debit the loan liability, thereby reducing the liability and credit the cash. At the year end, some interest may still be outstanding. Don't worry, it's not forgotten at all by the accountant. It will be tucked neatly into the statement of financial position as a current liability. So please be mindful of the precise requirement of the question. Now, armed with an understanding of the accrual accounting and recognizing that the finance cost figure is required for the profit and loss, let's begin. As usual, I will dissect this question step by step, reading each sentence and crunching the numbers specifically for SPL. It is crucial to note that I will be disregarding the timings of the interest payments for the sake of our finance costs, as it will appear in the profit and loss account. At the start of the year, there is 1 million loan liability and the interest is 8%. Please ignore the timings of the actual interest payment, as SPL figure is not interested in cash payment. Fast forward to 30th of September and we see repayment of loan liability, leaving behind an outstanding liability of £750,000. Now think about this and work out the interest charge for 1 million at 8% for 3 months only. It amounts to 20,000, as you can see. Now, we also have to charge interest on the outstanding amount of £750,000 for the remaining 9 months of the current year. I hope you can work this out as £45,000. Once again, in the question, the examiner is trying hard to distract you with the payment of interest. It's a trap. Keep on moving. You are here to calculate a figure for profit and loss, not the SFP. Moving on, there is another loan of £50,000 at 7%. We need to calculate the interest on this loan for 3 months only. The interest payment is £8,750, as you can see. Now, let's add all of these figures. And the answer is 73,750, and the correct option is D. That's it.